It's Friday, the 11th of February 2022. Welcome to the Fast 5 by Fear and Greed, where we give you the top 5 business stories you need to know in just 5 minutes. I'm Michael Thompson, and good morning, Sean Aylmer.
Morning, Michael.
5 minutes, 5 stories. Let's get into it. Story number 1, Sean, is pretty extraordinary. It is all about the goings-on in Canberra. Defence Minister Peter Dutton made some pretty remarkable allegations in Parliament yesterday about opposition leader Anthony Albanese.
Yes, he said China is supporting Mr Albanese in his effort to become Prime Minister at the next election, which of course is due some point in the next 3 months or so. Mr Dutton said there was evidence that the Chinese Communist Party and Chinese government had made a decision about who they'll back in the next federal election. He offered absolutely no evidence to support the claim, though. Mr Albanese said the comments were not acceptable, nor were they in Australia's national interest. I think he has a point there. Earlier, the Prime Minister Scott Morrison, who's maintained a very hard line against China, said Mr Albanese was looking to appease Beijing. Clearly, the coalition has decided this is something they can fight the election on. Though generally, in politics in Australia, geopolitical affairs remain outside the politics of the day-to-day, generally. Obviously, that's not going to be the case this time round.
Yeah, we've still got a couple more months at least in the election campaign. It's pretty early for national security to be dragged out this way.
Yeah, that's correct.
All right. Story number 2 today, Sean. We spoke yesterday about Commonwealth Bank and the big surprise profit they announced. National Australia Bank was the next bank, the fourth bank, to provide a trading update. How did it go?
Well, its cash earnings for the quarter was $1.8 billion, which was better than most people expected. It triggered a more than 4% jump in its share price, so that's all good. Just like the other three, Commonwealth Bank, Westpac and ANZ, its profit margins, though, are being squeezed. Unlike Westpac and Commonwealth Bank, National Australia Bank said costs were higher as well, in large part due to higher pressure on salaries. Now, the Melbourne-based bank said lending to homeowners and SMEs were higher. That's good news. Deposits were up as well. So what have we learnt from the big four banks over the past week or so? The mortgage market is hot, very hot. Get out there, get yourself a good deal. Same deal in business lending, particularly National Australia Bank and Commonwealth Bank. They're after SME money. Profit margins are being squeezed across the board. Cost control is really important for the banks. And overall, the bank bosses think the economy will accelerate in the next 12 months or so, and interest rates will rise. That should be good for bank earnings. All in all, I think analysts that look at these sorts of things every day put National Australia Bank as the best of the lot, then Commonwealth Bank, followed by Westpac and ANZ.
Okay, story number 3, Sean. One of the worst performing stocks of 2021 was AGL. The energy giant, though, appears to be on track now to split into 2 later this year as part of its efforts to get back on track.
Well, that's right. Plenty went wrong for AGL last year. Its CEO outlined a split into 2, separating the green assets from the fossil fuel assets. He then resigned. The electricity producer was broadly unloved by investors because of its dependence on fossil fuels. Of course, it's the biggest generator of coal-fired power in the country. At one point last year, Michael, it had lost 80% of its value from 5 years earlier. But since November, the company's share price has bounced. In fact, it's up nearly 50%. Surging gas and electricity prices, obviously, they've helped. So too, a more settled management team. It also knows what it's doing about who's running the different businesses when they separate later in the year. Yesterday, AGL said it was bringing forward the closure dates of its 2 major coal-powered generators, and while its underlying profit was down, it was actually better than some analysts had forecast. Some good news, finally, for AGL Energy.
Okay, story number 4, Sean, and obviously it is earnings season at the moment, so we're hearing a lot of companies reporting results. And one company that everyone always pays a fair bit of attention to because it's one of the most iconic companies in Australia is AMP. How did it go?
Well, it announced a $252 million loss, which obviously is huge, but we expected that because it had already told us it had to pay out on impairments, on write-downs, on remediation costs, on a restructure. So the actual number was okay. Its wealth management business didn't do so well, but its banking did do very well and its funds management business did pretty well. The news out of yesterday, though, is that the company confirmed a number of suitors were circling its asset management business, and that's called AMP Capital, though it's supposed to be spun off, and theoretically it will be called Collimate Capital once it is spun off. That triggered a 6% jump in AMP's share price. So some good news from pretty long-suffering shareholders, really.
Yeah, they have not had an easy run over the past, couple of decades, really, have they?
Well, yeah, I mean, certainly the past 5 or so years have been really rough in AMP.
Yeah, absolutely. Okay, final story. Story number 5, Sean. And Disney has eased concerns that the streaming video boom is running out of puff.
Yes, it reported strong subscriber growth numbers for Disney+. Now, remember a couple of weeks ago, Netflix indicated that its subscriber growth had slowed. Not the case at Disney. In fact, Disney said it's really confident that it will continue to grow, particularly with some of its big new shows coming on. The one they mentioned was Obi-Wan Kenobi later in the year, he being a Star Wars character, of course. Now, Disney's earnings from theme parks and resorts also rebounded. All in all, a pretty good news story out of Disney.
Yeah, certainly is. And look, bring on all the streaming services. I am in TV heaven at the moment.
Yeah, it's great. That was one thing about lockdowns. It gave you an excuse to stay home and watch TV.
Yeah, at last we have one. All right, that's it. The top 5 business stories in 5 minutes. Thank you very much, Sean.
Thank you, Michael.
It's Friday, the 11th of February, 2022. Remember to hit follow on the podcast. And if 5 minutes isn't enough, then you can find our longer daily podcast called Fear and Greed on your podcast platform. I'm Michael Thompson, and that was the Fast 5 by Fear and Greed. Have a great day.